Sanjay Purohit, the whole-time director and group CEO at Sapphire Foods India, joins in to talk about how their quarter has been. Sanjay, hi, morning. With the rising competition, your same-store sales growth has seen a bit of a decline. When is it that you see it, recovering?
Good morning, Aisha. Good to speak to you. It has been about 3-4 quarters when we've seen softness in consumer demand. I mean, if you look at the private final consumer expenditure metric that the government puts out, it's been the last couple of quarters has been perhaps the most constrained over or since 2003, 2004. So soft demand conditions and heightened competition is what makes this quarter also a little constrained. I think we might see this for perhaps another 1 or 2 quarters, and then we will see an improvement in overall demand conditions. Having said that, all in all, Sapphire Foods has had, we think, a really decent full year. When you look at all-round performance, and I look at revenue scale, growth, EBITDA margin percentage growth, and new restaurant additions, we perhaps have had the best year of all the QSR companies.
But is there a level that you're working with specifically for KFC for your same-store sales growth?
So our aspiration is that we've got to grow same-store sales growth by anywhere between 5 and 7%. This last 5 or 6 quarters has been nowhere near that. And hence, we're looking internally saying, while demand conditions might be muted, what can we do to improve growth on each of the brands? And really, it comes down to 2-3 things. One is invest in innovation, invest in greater marketing, and get further improvement on our customer and operational metrics. And then be cautious on our new store expansion. On KFC, where the brand is really doing well, we'll continue at the pace of expansion that we have had. On Pizza Hut, a little more cautious.
Detail that out for us, Sanjay, because I think in Q4, the overall store addition was 22. You talked about how you're going a bit cautious in a certain segment, but give us the numbers. What's the plan for the next 6 to 9 months?
So typically don't like to give a 6 to 9 month a forecast. But what we've said is KFC. So if I just look at quarter 4, KFC, we opened 23 stores. We didn't open a store in Pizza Hut India. And we had 1 closure in Sri Lanka, but that we will make up as we go forward. I think that we will, if you look at December 21, we said we should be able to double our store count in 3 to 4 years. In KFC, now it is closer to 3 years. So we should be able to double our store count by the end of the year. On Pizza Hut, given that we are at about 5% restaurant EBITDA, the conditions are not really conducive for expansion. And that's where we are going cautious. Give us 2 or 3 quarters. Let's get the brand back on track, on the growth track, and then we will talk about expansion.
Let's say discretionary spends. And going out and QSR is also part of discretionary spend. I look at car sales, I look at travel, I look at tourism. All these sectors are booming because India is doing well. QSR, in a sense, is perhaps the first go-to space because you want to experience and you want to eat out, you want to dine out. Why is the sector going through a rough patch when, in general, the economic indicators are so strong?
Yeah, so I guess that's the little dichotomy that we are seeing. When you see some sectors doing well, for example, as you said, travel and hospitality and perhaps airlines, and looking at the queues at the airline counters seem to be doing well. But a large part of consumer expenditures actually muted. If I look at the results that most other consumer product companies have put out, they've been, and I've got a background in consumer FMCG, they've been really, really poor. I think QSR post-COVID saw an incredibly good bump up for about 18 months. We are cooling off from those highs, but and there's been a little amount of heightened competition also, perhaps. So I think these are all cycles that we go through. From a long-term perspective, I would still see a multi-decade opportunity in both KFC as well as Pizza Hut. But we've got to weather the current turbulence a little bit.
When you say you expect things to improve, that is how you started your opening remarks, Vic. What is giving you confidence that in the second half of this year, things will look up?
Yeah. So really internally, I speak very little about what will happen on the macro side because that's not something that is in our hands. I think what we are doing, however, is putting our best out in the market. And I'll give you Pizza Hut's experience. I think if you've seen Pizza Hut in the first half of 22-23, the brand was flying. Our same-store sales growth was really good. Margins were good. And then the last 4-5 quarters have been soft. What we have said consistently is, how can we take matters into our own hands? And I'm repeating what I said earlier, heighten the pace of innovation, put greater levels of marketing investment, further improve our customer and operating metrics, and then be cautious on expansion. And in the last quarter, I had called out saying that our innovation you should be able to see in the next 1 or 2 quarters.
Right.
In March, we launched Melts, which is really a unique pizza concept. It's a foldable concept. If any of you have not tried it, I urge you to try it. It's a brilliant product.
Sure.
Further investment in marketing. I think this gives me the confidence that we will come back, not the macros.
Okay.
The macros will be the icing on the cake.
Okay, clearly their innovation is going to do the trick. Just quickly, last couple of questions, Sanjay, before I let you go. You talked about the long-term, medium-term outlook, and I remember in December 21, you had laid out that 3-year plan that sales and EBITDA CAGR is going to be 25-30%. It looks like a tall task right now. Do you stick with that? And secondly, I think last year there was that large deal also happened with your PE partner trimming down stake. Is there something else which is likely to happen over the next 5 to 6 months?
Yeah. So first, I'll just address your first question. Actually, if you see our 3-year scorecard, which we've put in our investor presentation, we've beaten these guidances by a mile. So we've grown revenue by 37%. We've grown EBITDA also really strongly. On KFC, instead of 3-4 years doubling the store count, we've been able to grow it, and we should be able to grow it in 3 years. So truly, that's so what we articulated in December 21, we've been able to beat by a mile. That's our aspiration even going forward, that revenue should grow in the region of 25%. EBITDA should grow in the region of 30%. You'll have quarters and years when it might be a little up and down, but I think that's the longer term aspiration, undoubtedly. From a ownership structure perspective, I think we've achieved a certain level of stability. Our promoter stake is about 31%. Our foreign institutional investor stake is about 30%. Again, domestic investor ratio is about 30%, and then rest is public and employees. So if you look at our shareholder cap table, perhaps again, it's among the best among the best, if not the best in the industry.
Okay, Sanjay, on that note, we let you go. Appreciate you making time and speaking with us. So